All right, welcome to mentfx. Now this video itself is going to be kind of a two-parter. The first part, the stuff that you're seeing right now, welcome to the public channel, is going to be a complete step-by-step of my exact system utilized and expressed on a completely random market. Again, win or loss, loss or win, no trade or maybe many trades. I don't know what the outcome is going to be, but I'm going to do a full play-by-play of exactly how I would have traded any of the markets that would have shown up in the last few months or whatever. And then what's going to happen is the second part is going to be a continuous demonstration of the exact same thing. We're going to do a little bit more markets, and we're also going to do a analysis or a watch list of things that I'm watching or will continue to watch into the coming weeks. So this video as well, like basically, if you guys are watching this publicly and you get a lot of value from it, use it, get better using it, and go and trade for yourself. And if you receive a ton of value and you want to learn more, then you can come work with me and the team and gain access to some of the tools that you see in front of you right now. So what I did is I created a very simple welcome YouTube screener right here. So all I'm going to do is I'm going to open this. This is the Omni screener powered by mentfx and soon to be powered by Ment Funding. But this is the standalone view of it. All I'm going to do very quickly to make it super simple is I'm going to literally delete everything so nothing seems out of the ordinary, nothing seems like too complex. Let me exit all these. No, I'm actually going to go in the columns and just delete all these. Right, so nothing is complex, nothing's out of the ordinary. We're just going to delete all these and press save so you can see what a neutral market state looks like, right? So ultimately, when we approach trading, right, this is everything that we have available to trade. And you can see this goes on for over 984 pages, all the way to random cryptos, anywhere to completely wample USD random cryptos from stocks, basically everything, right? There's just everything in between. And the way that you want to operate as a trader is you want to find the stuff that is special, right? We ultimately, as traders, are looking for the stuff that has money coming into it in a way that is different than what the overall space looks like, right? It's very natural for most people to lose in the markets, right? We all know that 90% of people lose. It's very natural for 90% of people to lose when 90% of people are doing 100% of the wrong things. What I mean by this is that if you're part of the space that kind of logs on every single day, picks a random asset randomly just because it's a blank asset, so literally choose any of these, right? Just randomly pick one and then starts trying to quote unquote trade it and apply random strategies and entries to it. What happens is you get random results, right? Because ultimately, if most of trading is made up of being patient and waiting for a good entry, but most traders end up simply taking anything at any point over and over and over again, then it's safe to say that a lot of failure comes from the fact that no one has a refined enough system or a refined enough area to enter on, right? So the very first basis of everything that we do at mentfx and the way that we think and the way that I even teach on this channel is we try to find the things that are outliers, the stuff that are special, the stuff that is basically telling you, screaming at you almost, that something wants to happen, that money is entering a market in a way that is different from anything we have seen before or have seen for a while, and now it has created the basis for a continuation, right? That's what true accumulation looks like, or true distribution looks like. So some of the ways that you can do this is you can literally, as a lot of you know, let me actually go ahead and open, here we are with TradingView. You can literally, within your TradingView or whatever, you can go through every single asset. Let me actually open the chart functionality here, and let me just go to where we actually have the charts available. I think we have them for the stocks. Here we are. Let me just do this and go to a daily, right? So you could do what some people do, and that is go through every single asset in existence, simply go through them step by step and ask yourselves if these are meeting the conditions for a trade, right? So like a lot of people would do, you'd go through every single asset and you'd start asking yourself the question of, does the current market in the way that it's moving represent a market worth being a part of or not, right? Being able to answer that question is one of the most fundamental parts of trading, right? The people that are unable to answer that question and that log on just to trade EU every single day, or gold every single day, or NQ every single day, or a random stock every single day, right? It doesn't matter what the asset is. The people logging on to randomly trade shit every single day are the same people that are going to be losing long term. These are the same people that you see stuck in the market for 5+ years of learning and feel like they're getting nowhere. And a lot of the time it comes from the fact that they simply have not defined a process process to find something that is quote unquote special, right? If everyone is trading anything randomly and you are simply one of those people, you of course will get random results, okay? So the few ways that we kind of fix this, or one of the ways that we start to mediate this issue, is we create what are called filters, right? We create screens, we create filters around the markets that are available to us to find stuff that has the capacity to make a better move than randomness. So the way that I want you to think about this is, if you are operating, let's just go like this and make this paint a little bit bigger, right? If you are simply trading anything and everything, right, then it's going to be very easy to understand that during a period of price, let's just say this is market A. During a period of price that does something along these lines, right? And some markets do move in this capacity right here. What's going to happen is that regardless of whether you're taking longs, and again, you can draw in random lines that represent where you might be going long, or whether you're going short, right? So again, just assume green is long and red is short. Regardless of whether you're going long or short, in a market that is basically going sideways, or even worse, a market that has even more wicks that kind of move higher and lower and basically creates action that is extremely indecisive, extremely volatile, right? Not in a good way, like volatile in the fact that it's just going sideways and there's wicks going up and down and grabbing orders everywhere. Well, what's going to happen is, regardless of your longs or shorts, if you want to make money out of those longs or shorts, you never will, or it'll be very hard to, with the exception of some really tiny areas like this where you get a long with a nice stop and then this goes like 1 to 3 RR, right? So understanding that markets at given points in time are not always worth trading is one of the most fundamental parts of trading, right? Because it actually forces you to become what I call a professional inaction taker. A professional, it develops a professional ability to look at a market like this and say, I will not watch it for any reason, because there is no reason to watch this market. 90% of traders operating the market cannot do this right here. They cannot press that red button, or they cannot have the thought in their mind to say no, or to go, there is nothing here. A lot of traders, no matter who they are, no matter how much capital they have or what they're trading with, a broker or a prop firm or anything, when they open a market, they need a trade. If you're of that person, you are going to find yourself in this issue. And when you have this issue, what happens to your equity curve as a result, so if we think about equity curve, is that you get tiny wins if then, right? So if you even get lucky, you'll get tiny wins. And most of the time you'll either be at break even or in losing trades. So a lot of your equity curves, no matter what, will look a little bit something like this right here, if you're using very good risk. And then on top of this, if you don't know what you're doing and your system has huge problems, right, then what's actually going to happen is you're not just going to experience this, but you're going to experience this plus the emotional aspect, right? And the emotional aspect is simply that you take your loss, or you start getting a trade that's going against you and you double down and you make larger mistakes and you move your stop losses and you re-enter trades in poor areas. And what happens to your equity curve instead is, instead of just going break even and loss and break even and loss, it actually goes through break even that becomes bigger loss, and the loss becomes even bigger, and then you take a loss and maybe you take a win that's more volatile, and all of a sudden your account's here, right? And a lot of people that I've seen blow up and fail evaluations and like break their brokerages or like break their brokerage accounts or whatever it is, usually have this issue happen, which is simply that a lack of a system, a lack of an understanding that you need to be filtering for things that are good, leads to taking trades and not being able to say no. And not being able to do that means that your equity curve always is going to be negative, even if you're very, very good with your management. And if you add the emotional aspect, which a lot of people have the issue of, because, well, if you haven't taken the time to recognize that you shouldn't be trading a market like this, you're going to have the emotional issues that come along with the fact that you're trading a market that is so hard to predict, right? So think about the fact that, you know, you very likely have traded a market in the past that has just been impossible to decide what it wants to do. So for instance, right, I'll wait for a market. If we look at this one right here, I'll wait for a market to make its way. Let me go to a weekly. I'll wait for a market to make its way out of some kind of large stage one. So let me just draw a red area here. I'll wait for a market to make its way out of a stage one, basically with a candle like this. before I even consider going long, right? And then by the time that's happened on my given time frame, and again, I'm using a daily, a weekly, and an hourly to enter, but you can use any time frames all the way down to the 1 second time frames. We have people in our team that do that, and you can look at that with the cheat sheet below. You can see the general formula, and if you want to learn more, you should join the team for sure. And those of you in the team, you're going to learn a lot from this video as well. But very simply, right, the person that doesn't understand how to wait is the same kind of person that is then trading and attempting to trade in areas that can be completely choppy and very hard to understand what price wants to do. And if you're trading those areas, then of course you're going to be extremely upset with the results you're getting. You're going to be confused by the results you're getting, and you're going to feel like you're doing things wrong, even though, well, you are doing things wrong, but the thing that you're doing wrong is you're not defining characteristics of a move, right? So now we get back to using some form of a screener. The first things that I do personally is I have a 7-day average volume. So, and again, I'm not using volume to trade specifically. I'm using volume to find liquid markets. So the first thing I do before I even touch anything is I usually go for a filter where I have volume, which means simply the shares that are traded every day. So how much is actually traded in the market from a standpoint of contracts or shares is at least over 1 million. This is very easy to meet. Even 2 million is fine. But these are very easy to meet. These are very easy qualifications to meet. And they are simply qualifications for liquidity, right? And I actually have this in the cheat sheet as well. And you can see already we cut down our available markets that we could trade or could look at to 2,600 from 9,000, just like that. And then I also do a dollar volume, and you can do this as high as you want, of course. And I have conditions that you can use in the cheat sheet as well for how to decide what number to use here. But I'm just, for the sake of today's video, just going to go like, let's say over 100 mil. All we're doing is we're looking at super, super liquid stuff, and we want to get rid of the illiquid stuff. And you can see that's still 1,080. Then what I'm going to do is I'm going to go in the columns, right? And I'm simply going to add a sentiment for the institutional. This is simply a sentiment that is proprietary to the mentfx team, but it's also available on the site for free, and you don't need it, but it just helps me with identifying good markets. If I'm looking to go long on a market, or I want to buy a market, I want the bullish side to be at least above 30. So that means that this little green area right here, this green area here in these numbers, needs to be at least 30 or higher for me to even consider a market. Oftentimes, a market that starts at 30 or usually is higher than that is a market that has started some kind of true accumulation. Those are the markets I want to trade, right? So these are now filters, and you can see we've now gone down to 995. And very simply, as we're working through this, we are already creating a funnel for the markets that should be tradable, or the markets that are worth trading or worth putting our money in. And we haven't even touched an actual chart yet. Now, that doesn't mean that you can't go through charts and go through all the stuff available here all the way forever and ever and ever, and just go through and through and through and go through them step by step and find stuff that really meets your conditions, right? Nothing's stopping you from doing that. I want that to be very, very clear. It's not like this tool is a necessity, right? But what is important is that you understand the importance. What's important is you understand the importance of filtering a number of assets, right, higher time frame or lower time frame, to get to a point where there's something to trade, right? That's really it. So we have that set too. Now, another very important thing that we use a candle change. I'm going to enable the candle change. I'm going to remove these time frames here. And what I teach my team to do is I teach them to take their V time frame, the validation time frame, and use the candle change on the validation time frame. So for me personally, if I head over here, my validation time frame, if we think about my current EVC, so I trade using EVC, which is a 3 time frame system. It's also in the cheat sheet, and you can learn a lot about it in the portal. And if you're part of the team, you guys already know exactly what I'm talking about. But for me, my EVC is simply a weekly, a daily, and then an entry on the hourly. So all my entries, always, because of the fact that I want to have simple systems that get me to good trades, is on an hourly time frame, right? And what that means is that my context is a weekly, and what that means is my validation time frame is a daily. So this is where this candle change metric matters, right? So again, your EVC simply could also be a 10-minute entry with a 1 hour V, with a 10 hour, or even a daily C, which means your validation time frame would be a 1 hour, which simply would mean that with the Omni Screener, you would set this to the hourly. That's it. So I'm setting it to the daily because the daily is my V time frame. That's all I'm doing here. So I want to make it very clear that this is not applicable only for one specific time frame or one way to trade, because I don't teach my team to think in one time frame or one way to trade. I teach them to think for themselves across any asset and time frame that they want to trade for themselves. But it's very important that you have the foundation laid, because without it, you'll be trading random things 24/7, getting random results like most of the population in the Forex trading stock futures space. And you'll never achieve your level of financial wants or freedom or whatever the fuck it is, right? Because the only way you achieve those things is you do what most people are not willing to do, and a lot of the time that's being able to be patient, basically being a professional inaction taker. So what I do is I set the candle change and I set it to the daily, and then for the sake of today's video, what I'm going to do is I'm going to use a look back period of actually. I'll go with like maybe 90 candles. So I just want a lot of candles. I'm going to set it to an expansion set to the bullish side. So all this does, I know this sounds complicated, but it's actually very simple. All this is doing is it's saying in the last 90 candles, so on this market right here in front of you, if I look at the last 90 candles, that would be this many candles right here. There it is. So what we're doing right now is it's saying in these 90 candles, right? That's what this look back period is basically defining. I want to see an expansion, so that means from a low to a high, any low to the highest high, that's bullish. So if I set it to bearish, it'll be high to low, but since I have it set to bullish, the way that it's doing now is it's finding the lowest low now, which is this one right here, and it's looking at the highest high. So the expansion would be set to around 110%. Right, so what we're doing with our V time frame now is we are looking for things that have recently, in some regard, moved and expanded in a very clear way. Because if we find the things that are expanding well, we can find things that are going to likely continue expanding well in the future. The way the markets work, and I'll show you an example of a recent trade I've taken. This is BNB USD. I took a trade inside of here that led to, this was insane because it actually ran over 70 risk reward multiples of the entry I took, but because of my management and because my management is not just taking 100%, I made 11R on the final close, 4R on a partial, and 3R on a partial. So overall, this came out to being just under 20 RR for me. That's okay with me because that's my rules. But what you'll notice specifically about this is that the way that we got to this move here, the way that we created this crazy move higher, is we simply had a market that had made moves before, and once again, that had made moves before. Markets that make good moves are markets that very likely create good moves in the future. Markets that are chopping or creating shitty action or going sideways are markets that in the future chop, create shit moves, and go sideways. And again, if you have no system for filtering, if you have no system for screening these things, or you have no system for actually operating, like an EVC, and understanding when and where you want to trade, well, what's going to happen is you're going to trade the chop. You're going to trade the uncertain action, and as a result, you're going to get uncertain results that are going to let you lose confidence. And when you lose confidence in what you do, well, you feel like you have to give up. You feel like you're getting nowhere, and you do this cycle for years, right? So I want to make sure that you do not experience that. And the best way to do that is to literally show you firsthand what good markets look like. And I know a lot of you watching this are going to look at this and be like, but I'm not trading BNB USD. I want to trade Euro USD, or whatever other market you can think of right now. And the real answer I can give to you is that why? That's literally it. Why? Right? You are a trader. A trader is somebody that simply pinpoints specific market environments that are exquisite, that are much better than other things that are available right now, and takes positive EV, so takes good risk for a good reward on those moves. A good trader is not someone that decides one day that they're a gold trader or a NASDAQ trader or a Euro US dollar trader and just hams it and hams it and hams it, because in reality there's no reason, right? A simple example for you is if you're a farmer and one of your cows has grown old, 90 years old, almost dying, ready to fall over, no longer can make milk, no longer can do anything, right? And right next to that cow is this young cow that can make many, many buckets of milk for you. And you look at the young cow and you go, no, I'm going to make this work with the old cow. Come on, old cow. Give me the fucking milk, right? And it's like, it can't make milk. It's like, stop milking me. Just let me die. And the young cow is like, I have the best milk to give you. And you sit there, you're like, no, the old cow is the truth, right? That is how I feel when I see people lock themselves in to one market, basically. It makes no sense, and people do it 24/7. So don't be the person that gets attached to the market. Get attached to the context, right? So what we do at mentfx, and the way that I teach everyone, and what I'm teaching you right now, is that you need to attach yourself to the way a market is moving, not to the market itself. So what that means is that with enough time, what you'll find is that your lists of tradable assets or entries or whatever it might be, especially the higher time frame you go, is going to extend to basically a number of markets that you don't even know what the fuck they are, right? Like a lot of these right here that you see on my screen, I don't know what these things are. And yet I'm trading them and I'm doing well on them and I'm making money on them. And most importantly, if I go to here, I'm making more money than I've ever made, right? I'm making better trades than I've ever had on some of these where they go 25R plus. You have this trade here. This went 23R plus. I took this trade in here. It went 30R, but I took a break even on it. I'll even show you that because again, you know, I have rules and my rules sometimes do lead to me taking break evens, even though the market, and I'm fully correct about everything, and then it goes without me. And then I miss the trades that follow up and I no longer am able to be in it, right? So everything that I'm kind of showing you right now is hopefully going to shift you away from a specific way of thinking to a much more open-minded way of thinking, while also showing you that just because you've decided to trade this way or that you've decided to go and find, let's say, the best of the best, it doesn't mean you're going to be part of it, right? Here's a great example. I have a market that moves without me, that goes without me, and I had to take a break even before it went without me. And then right before that trade, I had this market that I got to be part of, that I got to trail, and then I got to make a very good amount of risk to reward ratios on, right? All of which, by the way, has led to, and again, this is a data collection from, as you can see right here, from February 7th, and some stuff has been removed in terms of including in the analysis just for the sake of trying to look at things that are more in line with my rules only. And just assuming a 0.5% risk, right, you can see kind of the reward or the outcome of that. And I've had members that have experienced the exact same thing, right, with a win rate of like 25%. And what's interesting is like literally if I jump into our Discord here just for a second, and maybe this, I don't, like, again, none of these videos are pre-planned, but if I go to equity curves here, yeah, what you'll see is you'll see kind of similar stuff. You'll have people that go through and experience very similar things. Some people don't have as good of curves. Some people have great curves. Some people are just starting out their curves. And, you know, it always leads to the exact same thing. The more you do this and the more you do this over and over and over again, the more you start seeing real results behind what you're doing. That's really all it comes down to. Even with 25% win rates, right, you get to see how that outcome looks, where you can have months of nothing followed by literally a week of insane action. That's exactly what's happened to me. This right here is a representation of just my recent weeks versus my last like 5 or 6 months right here. This is like 8 months where literally nothing happened, right? And yet, compound-wise and risk-wise, it goes to make beautiful, beautiful outcomes on the equity curve that are supported by literally moves like this. So again, the higher the time frame you trade in terms of entry, the more markets you're going to be looking at. And most importantly, the lower the time frame you trade, so where you're looking at very low time frame charts, maybe a 1 minute, 10 second stuff where you're trading maybe much more liquid things like NQ or whatever, the more you actually have to be willing to refine to specific moments rather than trade everything, right? The people on NASDAQ or these low time frames on like Euro USD, NQ, whatever it is, that are basically, for lack of a better word, drawing out random highs and lows permanently every single day and trying to predict when it's going to go up and come down and go down and come up, are the people that are actually losing the most money over and over and over again. And the people that are doing the best trading like lower time frames on these super liquid things are actually the people that wait for a very specific moment. So for me, those specific moments would be like moves out of very, very clear like context time frame. So if I'm trading like a 10-second chart where I'd have so like, let's just break this down. So if I had an EVC we're at a 10-second chart, a 1-minute V, and like a 10-minute C, right? What I want to do on my 10-minute, right, is I want to find the exception. I don't want to find the stuff that is like neutral, where you kind of have natural moves, right? I want to find the exception. So what I want to do is I want to wait for price to make its way out of like large stage ones and trade inside of like here to the upside, right? So this is an example where I would want to be going long, and then price wouldn't actually end up taking off and going long, and it would fail. And that failure doesn't mean I'm losing, right? Remember that. Win rate, my win rate is 25%. I'm right 1/4 of the time. So trading here doesn't actually mean that you're losing. It just means that you have a refined area to look, right? And then similarly, when price then instead breaks down below here and starts doing this, those are the contexts I want to trade in. These are the areas where I want to make my money. Because what's happening is a lower time frame has been refined to the point where you are trading this one-sided, insane flushing market, right? Versus what a lot of people do, which is just simply show up on any day, start drawing out random zones, random highs, random lows, random highs, and starting to randomly trade at every single point in the market, right? So what you have to do is that the lower you go, the more you actually want to refine to very specific moments, like these insane moves, and be a participant within these insane days rather than all the inaction and uncertainty and chop in the middle. Right, the people that are permanently showing up, even on a lower time frame, to trade all this chop and shit in the middle, are the people that are losing. Remember that as you move forward with your own trading, right? And again, like all of this is being offered for as free as it can be, so you can literally improve what you do. And again, if you have a system that's really good, you can even check out Funding for a lower time frame futures account or whatever, because we have futures available with insane contracts and one-step evals and stuff like that. So you can check that out. But nonetheless, let's get back to the points of this overall video. And again, none of this video is planned, right? All I'm doing is I'm walking you through the way that we think. So nonetheless, I have a candle change set to my V in this case of 90. So I'm looking as for stuff that's been expanded, because the stuff that moves makes future moves. That's really it. So let's save that as well and see what happens. It should bring up another thing here, which is what it's doing right now. And just to refine to even fewer results, I'm going to turn on an average daily range percent for 20 candles. I'm going to save this, and all I'm going to do is when this loads, I'm going to filter for an average daily range. And by the way, you can see it's you can see it's like loads a little bit. We're actually fixing all of this as well right now. So this tool is going to get better and better for all the people in our team, and of course the people in the team will be grandfathered in, but this tool is very likely to be charged at a higher rate in the future as a standalone product. But anyone in the team, of course, has full access to this and will have full access to this forever. I'm also just going to simply filter for an ADR that is above 5. All this means is that every single day, on average, the market we're looking at moves like 5% or more. So again, all it's doing is it's really locking in and filtering for the stuff, or maybe even 6. Because I just want to reduce the amount of assets I have, because I don't want to look at a lot of assets. There we go. And we got it down to 131. And then what we're also going to do, just for the sake of this as well, is we're also going to filter the candle change on the daily to be above at least like 40%. So what this means is that over those 90 days, at some point, price made at least a 40% move. So a very large move, right? Started some kind of large move, because we're really only interested in the stuff that has the ability to really make good moves. So this might bring it down to like 80 results or something. I don't know yet, right? We're just gonna see what happens. Maybe it'll keep it at 130. Who knows? We're gonna let this load for a second. So all I'm doing right now is I'm actually showing you the full step-by-step process that I use to create that funnel that gives me things that could be worth trading. This is the exact same funnel that I use, and you can see it's loading a little bit because we're still fixing this with the developers. So we're gonna let that load in the background for a little bit. I'm gonna move this over while it loads. And that's the exact same process that I use to get any of the markets I have on here, that my team uses, that our team uses to get any of the trades that they get intra-week. Right, these are the exact same things that we do over and over and over again. So the same steps that I use to trade this AMD thing is exactly what I just showed you, right? It showed me something that has been moving, has the capacity to move. It's something I went through on my EVC to find that is moving well. You can see even have this red area here, but I'll just use a line instead. You can see we had a area where price had started a move that is different from what it was doing before, with beautiful, beautiful candles demonstrating true demand. So this is what we call an accumulation MB, an area that basically is defined by multiple fractals of demand being created. And then I start looking to trade it. And yes, I could have traded it up inside of here and up here, but the first time I traded it, as you can see, is all the way up here. If I go into my V now, right, you can see there were multiple opportunities inside of these areas of trade. I actually know a trader that traded it here and made insane money on this move right here. I also know a trader that traded it right here and made insane money on this move here. Because again, if you think about these little areas here where price pauses to continue, if you think about these little areas here and you get to your entry time frame, right, what these areas are is an entry here with a stop here, right? Let me just show you this, how it looks, right? An entry here with a stop here, and just this move, right, where you manage maybe with an average or something, and then it stops you out like right here, let's say, and you don't even catch the high. This in itself is already a 16R gain, right? For a lot of traders, one trade like this in a year, is enough to literally transform their entire trading to make enough money that they need for their annual income or even multiple years of income. And of course, the bigger their account is, right? So the bigger your account grows, the more simply a trade like this is worth. And especially for the fact that this is happening on an extremely, extremely liquid market, right? When this happens on liquid markets, it means that you can scale your capital to millions of dollars, millions, right? Even like 10 mil or whatever, and not have issues or huge issues with slippage and whatnot for entries like this, which should give you a kind of looking glass into what you're doing as a trader, right? The point of trading, the point of what you do is to scale your capital to a point where it exceeds by a long shot everything you ever need from an expense level, right? And simply, you can make your entire yearly income or whatever off one trade like this. So I just want that to be in your mind as you look at this, right? Because it's hard to understand when I go to a daily chart. It's hard to understand that on a V time frame, simply this pause right here where price, moves higher well, pauses on the averages and then continues a potential move. It's hard to believe or even understand that this move in itself is enough for anything, right? A lot of people think that the way they need to trade is that they need to get into a trade somewhere here or here, right? Here or here, and then catch it to here. That's the only way that some people think that money is made, which it's not, right? Money can simply be made from an entry right there, right? So let me do this right. An entry somewhere in here with a stop somewhere here with an exit up here, right? Where you don't even wait for the high, you just wait for it to break down and then you exit. This in itself is enough to pay for a year worth, for your whole family, for your lineage, for everyone that's gonna come behind you, for the fucking kids you're gonna have, for the kids your kids are gonna have, right? You need to shift your perspective in the trading markets to scalability, which is what's gonna happen if you wanna be a trader, and understanding that small pockets of moves, regardless of the time frame you're on, is all you need out of the market. So just to give you another example, like on NQ, for instance, where we just looked at that 10-minute example, right? Where like the money that I would make on NQ on the 10-minute example would be somewhere in here, right? So let's just draw this out and then go to a 1 minute, because again, now you want to filter down to where your actual moves are going to be, right? What's important to understand is that your money isn't made from here to here, right? That's not how it works, right? On this day, the money that you would have made is likely going to be, I'm gonna assume, from here to probably here or here. That's it. This move on enough contracts, right, given that it's liquid enough, so like 10, 20 contracts, which is insane sizing, right, with a stop like here, or, again, like entry somewhere here, stop somewhere here, exit either here or here, just depending on your rules. This in itself is, again, the exact same thing. This is this could be a 6-figure trade with no problem, right? This is how you need to start focusing or fixating your mind to think, right? It's not about showing up every day to take the special trade through a high and through a low, and lows get taken, and random imbalances and random zones, and everywhere there's a zone, and we trade everything. Instead, trading is about waiting for the special days, for the special stuff, for the stuff that is like different to what you saw, and then simply one trade, and one trade later, you're 5-figure, 6-figure, etc. level of trader, right? That's it. Now, let me just double check that the screener is working properly. But yes, I want you to shift your mind to that, because again, I want to remind you that this is not just applicable to the time frames I'm trading, or to AMD, which is the market that for whatever reason I decided to talk with you guys about right now, since I'm in a trade on it, right? So I literally took this trade on it here on Wednesday, and currently it's just at break even and there's nothing to do. It looks like it's probably just going to stop me out on Monday, but if it doesn't, then great, right? I might be able to make money on this move. I am using the same steps to do this over and over and over again. I literally need one of these moves a year for me to make more than I ever need to make, and then I get to take my family to Disneyland or whatever. A lot of the team know this, right? I trade, I do well, I perform, and I take my family to Disneyland. I have a good time with my family, and I get back to work, right? And it just takes a few of these a year for me to make my entire necessity of expense and everything, right? And similarly, no matter what time frame you're on, you can make the same thing work for you, but you need a system and you need to find these special moments. So that's what this video is about. It's about locating a few markets and doing a full backtest for you right now, randomly, off of first talking too. So, I can't like randomly scratch this video and be like, oh guys, I'm just gonna let's change up I'm just gonna go step by step and show you exactly how I would approach something to be as fair as possible. So I'm gonna pause this and make sure that the screener loads really quickly, and then I'm gonna be back and we're gonna go through an actual market step by step of how I would approach and apply my own system. And this will be all public for free, and then we'll go further from there. All right, I'll see you guys in a sec. All right, there we are. So what I had to do is I'll just show you guys. So I went into symbols. I had to change everything to just stocks for now. There's just a few issues that we're still trying to fix with the developers. So there's just a few issues here and there. So I had to change this to stocks. But what we did is if I scroll down, I changed this to also show 30 results per page. And you can see now we have 110 results that are here. And again, every single one of these is something that I really need a lot of you to understand. Every single one of these things in front of you, STI, Kidley, Ruklaba, Lou, Ons, Oost, whatever the fuck. Every single one of these have the capacity, basically, to become one of those best trades of all time, right? It's like your trade of the year. This is something very important to understand. Any one of these 100 assets could become the one that creates enough of a move for you to completely have your year made. And that's where you want to shift your entire mindset to, which is understanding that that's possible and then focusing on finding those things. So, to be fair with today, I just want to, again, I'll just click on chart here so you can see this as well, right? If I go to a weekly here, you'll be able to see it. You can see a lot of these over the last few months have created beautiful moves, and this is 160 days. These have created beautiful moves that you can participate in. On lower time frames, these are phenomenal. Look, another one. Let's just click through. I think a spacebar will work. Yeah, it does. This one, I actually remember we had members trade this. So this is on a daily chart. We had members trade this thing from here to here, from here to from here to here, from here to here, from here to here, from here to here. Now again, if you want to have this full thing, this is all available to every single one of our members. The Omni Screener has full charts, beautiful charts, no lag, no nothing, the ability to draw on and do anything you want with them. So a lot of power given to you, right? Oost, we can go through all these, right? Some of these are going to be a little bit choppier. Some of these are going to be harder to trade. PL, let's just go through these. PL, LBRT, Hive. You can see a lot of these have created these insane moves. What you need to understand is that only one of these, only one, and then catching a setup like this from here to here, or 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 from here to here. One of these setups is enough to completely change your life or your psychology or your approach to trading, which is what I want you to take out of this video. Again, I'm going to pick something relatively random from this screener today and walk you through step by step how I would trade it. Win or loss, big RR or small RR, anything, I don't care. I want to show you what you can do so you can take this and go and use this yourself. And I'm only going to do 1 or 2 markets max for the public video, and then we're going to do a little bit more for the private. And we're going to break down things that we're actually going to be trading and looking for, since, every single week we have either the same watch list or we have added things that are doing something special. But you can see so many of these have made these beautiful moves. And what I want you to do right now is I want you to study and really think about this move here. Look at it and then think to yourself, have I been trading assets that have had the capacity to make moves like this, or have I been cutting myself short and sticking to things that are, well, for lack of a better word, the old cow, right? Are you the person as a trader that has started to look for that young cow that you can milk and get the best milk and go and sell the milk and make so much money? Or are you the guy that keeps on trying to fucking make this old cow function properly, even though it's past its time span, it's past making milk, it can't do it anymore, and you're just trying to squeeze it out? The question I want you to answer for yourself is, are the markets you've been trading in line with this, where you can show up and kind of get one of these legs, right? Because again, the way I teach my team to think is in momentum and Bs. So that means entering inside of these areas here, inside of these areas here, inside of these areas here, where price moves, it proves the move, it pauses above and at the averages where it's getting bought up, so you can get in, and you can get in with, once again, entry with a very solid risk to get out either up here when it starts to lose strength, or even all the way up here if you hold it for whatever reason, and make insane RR returns. So you can only take a few of these in a year and completely pave the way for insane returns at the level of things like this, where things are truly just changing and going insane, right? So what I did is I went through this and I found something. So here we go. This is RGTI. This is something that has relatively recently been on my list for a very long time. This is like a quantum name or something. It doesn't really matter, right? It's made huge moves, and it's made some periods where things were a little bit harder. You can see there were some sideways moves. What I did is I went through the screener before. I kind of just scrolled through this. I looked at a lot of these names. Some of these names I've even traded. So I just want to show you this. Like if you look at this, you'll see names like ONS, ONDS, this thing. I actually have it. Maybe I've removed it now, but I should have it on my list here. There it is. I literally traded this thing, or was looking to trade this thing at some point. I took a -3 up here. It looks like I took a break even here. So actually, I think I missed this trade, but I know that one of our members caught this trade right here off of the accumulation, right? Price made a beautiful stage 2, price flushed down, price built the double MB, and he got an entry here. So what I tried to do is I tried to go through a number of these and be fair, because a lot of these I've already looked at, I've studied, I've actually traded a lot of these, and you can see how easy a tool like this makes things. You can literally just, I'm pressing my spacebar now. You can literally go here and just go spacebar, 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 and find the stuff that truly sticks out and that is special and that could be worth trading by going through your EVC and just applying it here and having it set to your time frame and all that fun stuff, right? So what I did is I went to the second page, I kind of let this thing load, and I was looking for things that have had enough action with, of course, the filters being met, so you know that I'm not using some crazy filter stuff. And what I did is I decided on this thing right here. This is something that I've watched. Where is it? RGTI. This is something that I've watched, but I haven't traded. So I want to go through this step by step and see what trades were available. Now I know, because this is going to be a public video, there are going to be some people, likely, maybe not, who knows, but there are going to be some people that watch this and go, what the fuck? He chose to do this market, now he's showing me this, and now he's maybe successful, because I don't know, this could end in losses, right? Yes, it's a good market, but it doesn't mean we're going to take wins. It means we could just take some break evens, maybe even some losses, maybe even some really nice wins. I don't know exactly what's going to happen, right? And I want this to be very clear that my purpose with making this video is not to show off as some genius that can predict anything. It's simply to show you steps that you can start taking in your own trading to visualize and understand how markets move, so you can get behind the next good move on any given asset, okay? And again, the most important thing in this game is not you versus me, right? You watching this being like, oh, what's this mentor doing? I gotta figure out the fucking bullshit. Where's the bullshit, right? It's not you versus the banks, right? It's not any of this, right? It's not you versus your friend or your family, your friends, your family. It's none of this. It's simply a game of you versus you. Which simply means that if I'm making this video to try to teach you something, and if I'm lying, I'm only hurting myself, not you. You can still maybe even learn from something from it. If I'm making this video and I truly believe I'm adding value, you versus you, then I know some people that are actually learning are going to take insane value. I also know that if I'm looking to walk myself through step by step how I would trade this, that if I lie about how I would trade it, or if I do things that I would not do live, then I'm lying to myself and I'm building a system that I'm not going to be profitable with. right? So everything about what I'm about to do or walk you through the thought process is to do with only me. I'm doing this for my own self-improvement so I can trade markets better. So I can take the trades that I'm taking currently and manage them better. It's so I can take good trades and take good losses. It's so I can take good losses and good break-evens and management to make money. None of what I'm doing right now from a video perspective is to try to lie or make myself look in a way that I'm not, right? I am playing this game for myself, and I want you to play the game for yourself too, which means you need to take full accountability for your own actions and how you act. So when you go and test things, when you open a market, like I just did, so let me go back to the screener. Page 2 is still loading, it seems. So let's let that load really quickly, if it can. Again, like I said, you guys can see, putting out tools and creating these, especially with the developers we're working with, takes time, and we're making it better as we go on. But I went through this, and you can see there it is. RGTI showed up on my list right here, and I was looking through them, and I was like, wait, this looks absolutely beautiful. And you can see this looks a lot like the other markets we just looked at that we went through. It's a demonstration of the fact that most of these markets or most of these filters and funnels will lead to a place where there's going to be something worth buying or something worth investing in and making money off of. And again, this is my own personal opinion, so please realize that. Don't go and do stuff live and do your own personal research and stuff, right? But the main and important thing I want you to take from this is that when I look at this, I know this market goes up. That's great, right? But the question is, how would I trade it? Where would I trade it? And why would I trade it? The game here is being honest with yourself. So when you now go and find markets and locate markets and markets that could be good or could be bad or whatever it is, right? You need to be extremely honest with how you would trade it. Because if you're not honest with yourself, you will never make money. And it will never be anyone's fault but your own. Okay, so I want to make that clear. I did select and choose this market beforehand. While I had the video paused, I went through a number of these and said, hey, this looks like it had a market that was very clean, potentially choppy, but tradable, because the purpose of this is to demonstrate how I am using the EVC to stay out of markets, to watch for markets, to potentially get involved in markets. It's not to prove that you can make a ton of money. It's not to prove anyone anything. It's simply to walk you through how and what I do every single week, how I use the exact tools in front of you, because remember, what we did, welcome YouTube, right here, is we found a market using very, very specific screening steps. And again, I could do this on any one of these. We could choose, for another future video, we could choose Cialis-K. It's going to be the same thing. I know I'm likely going to make money inside of this leg here. I know I'm likely going to maybe take a break even or make small money in here. And I know that I'm going to maybe get a little bit chopped up in some areas like down here or here. And that's fine, right? I already know prior to making a video or looking at something where my trades are going to be, because I've done this for long enough to know exactly what I'm looking for. Just like you saw me on NQ on a lower time frame break down an area where I would watch markets or watch the market, I do the exact same thing every single week on the markets I watch. Okay, so enough of that. Let's go to RGTI. Oh shit, I accidentally removed it. Let's go back. There it is, RGTI. We'll let it load back in since I just removed it accidentally. But this is a market, once again, that would have popped up with our filters, with our screener, right? Simply, it would be a market that has shown up that has had a sentiment that's institutional and been met to a side. And you can see right here, based on the 90 candle change, it's made a 350% move. And remember, one of the filters we looked for was that 40% move. So that means within some period, I would not have touched this market until it made a 40% move. That's important because it begins to qualify markets and prove to you that you don't have to be there for the beginning of the move and predict shit. You don't have to be there for when the market's going sideways and is uncertain. You can simply show up when things have started. Fuck that fly, I killed him. When things have started to move and to demonstrate themselves, okay? So what I'm going to do is I'm going to be honest with it. So right now, 90 candles back would be right here. Right here. This is 90 candles. Boom. 90 candles. So right now, the filters that are being ran on this right here is telling me that everything is met based on a price action start from right here. So out of fairness, I'm going to go back here, just like that, and I'm now going to ask myself, based on the same 90 candle rule, would the screening parameters be met? So what that means is within the last 90 candles, we made at least a 40% move, because if it hasn't, I would not touch this market to start with. That's very important. Excuse me. So that means that what we're doing now is we're imagining that we simply were going through this a few weeks ago, So 90 days is 3 months. We would have been going through this 3 months ago. And the question is, would I have seen a market as I simply sat here and went, okay, ready? As I pressed spacebar. Maybe I'd watch it. Spacebar. Whoops. Spacebar. Maybe I'd watch it. The question now is simply, when I'd be going through this, just going through them, is this a market that would show up as something worth watching? So number one is, within the last 90 days now, where's 90? There it is. Has this made, boom, at least a 40% move? So let's play that game now. Here's the low. Here's the high. This has made a 120% move. So at the time of showing up to this, let's draw a red line here and label this. This will have already made a 120% move higher. So at this point in time, let's actually double click this and add the 120% to the text, 120%. This would have already made, actually we'll just do it normally. This would have already made a 120% move higher, which simply begs the question, has this met the criteria, the minimum criteria for a move that has in some scenarios started for a potential continuation? And the answer is yes. Now, just because it's done that does not mean it's a viable market to trade, right? I would have shown up, this is the market I would see. And now the question becomes, does my EVC currently, so the EVC, which is the story of the market, does my context time frame, does my validation time frame, and my E time frame, and remember we're on the validation time frame right now, does it currently meet the qualifications for a setup, right? Or for a potential setup in the future? So that's what I want to prove to myself. So the first thing I do is I start with the weekly, and I ask myself, where are we in the cycle? Now, if you don't know what I'm talking about cycle-wise, then work through the portal material within the private mentorship, or look at the cheat sheet and watch some of the recent videos on my channel, including the free webinar I made available, the 2-hour-long one, where you will see me break things down from this exact perspective over and over and over again. But very simply, everything we do is based and rooted in true stage theory and Wyckoff theory. Right now, looking up this stuff online will not help you because the way that we have moved our understanding has shifted in a huge way. But very simply, I would now want to analyze this from a perspective of where we are on the weekly. This is 90 days ago right here. This is where I'd be showing up to the market. And the question is, are we in a clear enough bias or context to actually trade this asset? So the number one thing that I normally do is I kind of zoom out and I ask myself, where are we in the overall market? So I try to define step by step what has happened to this. The first thing I would do is I'd notice this overall sideways price action. This is what I call a stage one that occurred with all the averages that were kind of intersecting and going sideways and basically price going sideways inside of this area with primarily this beautiful buildup on the downside. So when price had started to move out of this area, specifically on this candle, that is where I would say we had the go sign, the green light, that we have a market shift and a change in what this market wants to do on the C time frame. So this is what I label as, from a standpoint of cycle, the accumulation MB. Accumulation MBs, and we teach this a lot in the portal material, but accumulation MBs are simply a stage one, so that's sideways action, that is now being met with a stage two, so upwards action coming out of a stage one, right? Basically the demand validation out of that. So the way I want you to think about this is this all acted as a huge down move before an up move, right? So on some time frame, this is actually what's happening. We're trading the fact that demand is overall being validated. And this is directly from the portal material, but this is the simple version of it. Demand is being validated. And at the same time, inside of that, of course, because it's a fractal understanding, this area here, down move before the up move, acts as the same thing. And due to the veracity, which simply means the big move that we got here, this is what we call, from a cycle perspective, your first sign of true momentum. The sign of true momentum. Okay, this was the sign. This is where it happened, right? So at the moment, everything on the C time frame is actually aligning currently for a very good market. And I can already tell you that you could have made life-changing money based on your account size on your validation. Oh my God, there's a fly in here. I'll kill him if he comes again. On your validation and entry time frame inside of this move alone. I can already guarantee that, and I can prove it in a sense, right? So I can go back and I can tell you, there's going to be amazing moves inside of here. So again, this is one of those examples where you can enter here, stop loss here, 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 and exit wherever. Like when price starts to go higher or break down. Any one of these would have netted an insane RR multiple return. So I already know looking at this, that there were good opportunities on this. And this is important because, again, we have a market that has proven that it has the capacity to make you money, right? That's important. A market that has proven that it can make you money will likely make you money in the future. And the question simply becomes, is it currently in a state where making money on it is a likely occurrence? So when price moves higher, it starts building a momentum MB right here on the averages, on the weekly, and then it kind of goes sideways for a while and kind of breaks down. This is beautiful because when it breaks down and remains kind of above this rising 50, what we have is we have a reaccumulation. That's how we teach it, right? As you guys know. So that new stage 1 being built, if we draw it as a box, right? But most importantly, the way that I do it is I use a red line or just a normal line to demonstrate where that area is. This is where I would basically say we've had the buildup of a stage 1, or even you could even do it a little bit higher and say this whole thing here was a stage 1, right? Because again, we're looking at price here. We're not even interested in trying to trade all this stuff here, trying to figure it out. We are simply being very fair with where price would be 90 days ago, and we're asking ourselves, do the screener rules meet what we look for? And the answer is yes. And then the question is, does the EVC align for an actual setup? Okay. So this was an overall stage 1 that kind of happened through this area, and price did break down, which means that the cycle had reset. So again, we'd want to see some kind of sign of true momentum, which again would be demonstrated with this candle right here in front of us, right? This is your accumulation MB. This right here is now acting as your sign of true momentum. So at this point, all you have to do, right? So it becomes very simple, and you can see it's always the same thing. It always does the exact same thing. This is what it means to trade in cycles and wait for the clearest of cycles and clearest of entries. All we have to do now is assume that price is going to go through either a full accumulation. There we go. So money can be made inside of this area here, right? There it is. That's where money will be made. Or price is going to go through buildup of momentum, and then continue, build up of momentum, and then continue. Either one of these, in terms of whatever way it wants to deliver, are going to be completely acceptable for trades. But the only thing that matters right now is the cycle, which is that price is maintaining and proving strength. Price is going sideways and then coming out of that area with strength, showing us that same accumulation followed by a sign of true momentum, that accumulation followed by a sign of true momentum. So the only thing left to do is follow this on our validation time frame for an entry, which means if we showed up to this, and this is what I saw in the screener at the time, because right now this is here, but if I saw this at the time, I would simply say the following. There is a move, the screener is met. The C time frame is perfect for an entry. There's a sign of true momentum, that looks perfect. There is an accumulation MB, but currently there is no pause on the rising averages, which means this becomes a market I simply have to wait on. So what I do in times like this is if this was the live market, is I would right click right here and I would press create alert. Now you can see there's no way to create an alert right now because, well, we're in a backtest environment, but I would create an alert at this average and I would just check in every day until my alert went off. So simply, I want you to imagine this line right here as what I would call an alert. Let's just go alert. Let's put it on the right. So simply, I want you to imagine, boom. I want you to imagine this is fully an alert. Let's make it dash so it really feels like an alert. There we go. And all we're doing is we're just assuming this right here is set as an alert. Boom, okay? So that means that I would simply have an alert set here and I would walk away from this market. That's it. I would walk away. There's nothing for me to do. What I'm doing as a trader on my validation time frame is I'm looking for what? I'm looking for a clean up move, like this potentially, and then a pause, so a move back down, slowly, a beautiful move back down to the averages, right? Which means at least the 5, which is this light blue area, which is where I'd set my alert. And there's nothing else for me to do. I don't have to watch, I think I got him. I don't have to watch this market. I don't have to go fucking crazy. I don't have to be a schizo about it. I simply wait for the move to be met now, for the cycle to start playing out so I can be a part of it. Now, the question does become, where are we in the actual cycle on our validation time frame? Because it's the same thing. Well, price had moved higher, price had broken down and started going sideways. The exact same thing that you just saw me look at on the C time frame. Now, again, just because it's doing it does not mean I'd be trading it yet, right? I'm simply analyzing and creating the steps of what's actually going on here. So this right here, this candle, is your sign of true momentum. And as well as that, it's the move out of the accumulation MB. So you can see fractally how the same thing happens. That's your accumulation MB out of a stage one. Again, that's their sideways action at the averages or below the averages. Price then moves out with a stage two and begins to pause. This is actually your beautiful pause on the averages. This is called your momentum MB1. So currently, momentum MB1, currently, because we haven't began to extend in momentum, so we haven't started making a second or a third or a fourth, we can simply assume that if another one happens now, a second momentum MB, it's going to be a phenomenal opportunity to enter because everything is aligning so far. The context is good, and the context is made up of both the actual analysis of what's happening here and also the screener reading, which would have shown up. So again, simply the market would have been, where is it? Here at the time, right? Let's see if we can find the daily now. So at the time, boom. This is how it would have shown up. This is it. It would show up like this in the screener. And I would say, wow, this thing is making a beautiful move. Wow, this thing is coming out of an accumulation. And I check the weekly and I'd say, wow. Well, I'd have to go back to where the weekly actually is right now, which I believe is right there, right? And I'd say, wow, this is in pure accumulation and everything is being met currently for a trade. That's it. I've done my work. There's nothing else for me to do than set alerts and wait for those alerts to go off. I have no other reason to watch this market other than to wait for my setup, which means if I'm randomly watching something or forcing things, I'm just being stupid. So I'd wait for the next day now because there's nothing else to do. What happens the next day? Nothing. My alert doesn't go off. So I check in on this throughout the day. Like I check in on it at the end of the day because I have an alert already, and I simply take my alert and I move it up. That would be my last 24 hours of work. That's it. I would check in at the end of the day for less than 5 seconds and move my alert higher and walk away because the market's already good. It's already met my screener readings. It's moving the way it should. The validation time frame has not paused yet, which is a necessity for me to trade. So I have nothing to do because I don't randomly take trades just because, right? And I've identified specific moments where I want to act. And those moments are the special stuff, the special shit. That's the special shit. Back here, this was the special shit. Why? Because we went sideways for a long time and then we came out with veracity. This is where I want to trade. And this is where I would make my money. All I'm doing now is I'm waiting for this exact same thing again. So what would I do next? I would have traded here. This is the veracity. This is coming out of this area. This is your accumulation MB. This is your sign of true momentum. So what I want to do, I want to start watching for what? For this to happen here. That's it. There's nothing more to it. It's as simple as that. But it seems complicated and people make it complicated because they lock into one asset and they lock into shit action and they try to make it work and they just can't. Instead, focus on the best of the best and then get yourself behind the move. Okay, so this is where it'd be. My alert would be set. There's nothing to do, but this move is beautiful. I would be waiting and loving it if it could pause now on the averages and give me a setup. That's it. That's all I want to wait for. Next day. So I check in at the end of the day because my alert would not have gone off yet. So again, at the end of this day now, so this would now be 48 hours later, I would have said, oh, nice, it's coming down. It's probably going to set up in the next 2 to 3 days. I set an alert right here, and I would be expecting for this to now pause either here, or even come down here and pause on the 20, and I'd be looking for this move next. Because again, I don't know where it's going to pause or how it's going to pause. All I know is what it's supposed to do, and if it can do that, either to there or even to there, right, then I'm going to know that I can trade it. So next day, simply I wait. And my alert would have gone off on this day, which means, boop, I now want to start following this thing on my entry time frame. So we are now at, like what? 48 plus 24 is how much? 72. We are now at 72 hours later, right? We've done 72 hours of work, which was actually 15 seconds, right? 5 seconds a day. 5 seconds, move my alert. 5 seconds, move my alert. 5 seconds, move my alert. Oh, the alert's going off. I should now watch this for the following days and stuff. Now the hourly is my entry. This is where I want to enter. And what am I looking for? Well, I'm looking for the cycle of entry. And this is again in the cheat sheet, but you also have gone through this in the portal. I've broken it down with great depth. So what do we look for? Well, we're looking for reaccumulation ranges. We're looking for a stage 2, which is exactly what we have here. This is a phenomenal and beautiful stage 2. We want to see a flush that breaks price down and starts creating true accumulation or reaccumulation at or below basically this red line, because it demonstrates that there's new buyers potentially coming in. And that's exactly what we have here. We have a stage 2 followed by a flush. And I'm going to move this red line over because simply it's demonstrating the 120%. We don't have to have it in the way. I don't need it in the way. So what we're interested in right now is the fact that we have this beautiful stage 2 higher, right? Clear that there are buyers behind this thing, and now price is breaking down within a very, very bullish market. So again, I can even draw in these lines to demonstrate that. Same thing as you see here. Every setup I take is the same exact thing. It looks exactly like this. And if I head back over here, this is what we call the reaccumulation range. Price is breaking down for the purpose of very likely reaccumulating. So what do I want to see? Well, I want to see the double MB setup, also known as the ICI on this channel. Simply MB1, MB2, somewhere at or around these averages. Price should move higher and build a very nice area that I can buy stop price and get in for a long. That's it. This is my entire system in a nutshell. But as simple as it looks, it requires you to be extremely patient for the right kind of moves. And then when you do take something, to be patient for the move to either play out, to manage, or to lose with no problem. So remember, we're right here. This is where we're assuming price is. Now we know already, look, we know it's going to make a crazy move. That's great. It doesn't matter. We need to be honest with how we would enter the trade. So let's see if a trade actually presents itself. That's all we care about right now. So we'd be waiting. Price does start making a little bit of a move higher, and it does pause. This is perfect. This is where I want to step down to my E micro to basically get the entry, right? Look at this. I would simply be buy stopping this high. Nothing more. Let me show you. This is perfect action. Price moves higher, price pauses. My expectancy is that if this does qualify through this high, it should take off like this, right? And it should start another move that looks like this one here. That's it. Price moves in stage 1s, stage 2s, stage 1s, stage 2s. And I want to capitalize and make money inside of this move, and hopefully more of it if it keeps going. That's it. And we're in a perfect area. We're in a perfect MMB setup right now. We're in an area where we expect it to go higher, and the weekly is perfectly in an area where we expect it to go higher. So all I can do here is execute my rules because everything has met. My alert's gone off, and now on this day, price opens up, and an hour later, I'm setting my entry to go long. So let me set this up for you guys so you can see it. This is how I would set up my long. At the moment, you can see I'm going to go to here, the mentfx Structure Premium. This also comes with a subscription to the mentfx mentorship, but you guys can also simply copy a lot of the indicators on here and just add them for free, but then you have to pay for TradingView and stuff like that, but whatever. You can figure that out. I have it set to an hourly ATR. So again, I'm just looking at this number down here, 0.4. I just want this stop to be under 0.4. So right now that does get met. So this is a long I would set up as a stop order. And let's just set it as, let's just assume we're risking, how much are we risking per trade? Let's just assume we're risking, let's say we have a $50,000 account, and let's just assume, or like a $100,000 account, something simple. And let's just assume we're risking like 1K per trade, okay? Just to make it super, super stupid simple. Again, the numbers don't matter. Let's just say it's $1 million and you're risking 10K. Again, because I want you to disconnect from account size and think more about our R. So I'm just going to use numbers that are probably larger than what you're used to. So you're no longer fixated on the monetary value and you're fixated on the RR value, okay? And very simply, I would then set this up, stop order, and that's it. This would be the order, and I'd have it set for the day, and I'd do a tick above, just like that, okay? And I'd wait. And if this wants to tap in, then great, and if it doesn't, then there's nothing for me to do. And we'll just let this thing do what it needs to do here. All right, it still looks like a great setup. I'd still be more than happy to trade this. Looks like it comes down a little bit. The setup still looks pretty decent, though. Let's look at the hourly very quickly. Stop order canceled. No, it's fine, okay. Yeah, I mean, I think this still looks perfectly fine. Whoops. This looks perfectly... discard. This looks perfectly acceptable. Let me make this smaller. This looks completely acceptable for a trade. It can still easily tap us in right here and give us a trade, so still good. Okay, and we get tapped into the trade. That's it, right? Now, again, I don't know if this is going to continue or if it's going to make this move or not. It doesn't matter, right? What matters is the management rules. And my management rules are very, very simple. When I get tapped in, I'm going to watch the E micro. That's why I'm on the 2 minute here for my management rules. I don't use the E micro for anything else, but I use it for management. Let me move the stop loss down here as well. There we go. So all I want to do now is for my management rules, I want to see some kind of pause and then a move away. And the second that happens, I'm moving to break even. That's it. Or if it starts going higher, like here, if it pauses and goes higher, I'm just going to move to break even. Okay, so there you go. And just like that, I no longer have any risk on this trade. That's it. The trade is basically done. The trade can become a huge winner, or it can do nothing. It does not matter. And now I'm going to apply and watch this on the hourly. So now price either comes and takes me out, or it starts to move higher, and I get to manage my trade. Okay, so let's see what happens. Looks like it's about to stop me out, and okay, looks like it might start to move. And looks like it's going to stop me out, and looks like it might start to move. Okay, it's probably going to stop me out. There you go, right? It does not matter what it wants to do. It's just, there you go. And we simply take a break even on a trade that doesn't want to go. When demand gets validated, which it does here, if the demand validation is true, as you guys have learned in the portal material, or if you haven't, this is a rule for you to write down. If the demand validation is true, price is going to hold above that and start to move no matter what. So for instance, I want you to look at like an example before. For instance, I don't know if I can find a good spot right now because this is... There wasn't good action prior to this. Maybe I can find something in here. Yeah, so there we go. Right, so if demand validation is true, so look at this area here. Price moves higher, pauses, and if I buy stop this, if the demand validation is true, look what happens. Price does not return. Price goes. This is how, quote unquote, imbalances get created, and if you really think about it, imbalances are for the purpose of actually making price go instead of having price come back randomly. So hopefully if you're learning a lot of other things online, you start realizing why a lot of the concepts you might be learning are actually very negative for you. But nonetheless, look at this, right? This would have been a stage 2, price flushes down, creates that move, that's your buy, and if the move is true, it's gonna go. So that is why you see me manage the way I do. And because this move wasn't true, wasn't the real move, let's call it that, right? Because it wasn't the real move, simply, I'm stopped out of break even. So I'm gonna go like this. I'm actually gonna delete it off the screen because I get very, what do you call it? I start to see things differently if I have my prior trades on the market. So anytime I take a trade, after it completes, I fully remove it, right? Because I want to look at any market always from fresh eyes. I don't care if I took losses before or break-evens before. I care about what is the market telling me right now. It's very important. I suggest actually a lot of you do it, right? Simply remove any analysis that you had or remove the entry or whatever after a loss or a break-even or a win. You don't want it to affect the way that you act going forward, right? Because you want it to be fresh. So here's an example where, again, it just didn't work, right? There's nothing for me to do there, right? The move started, and it could have just as easily made something like this, right? It could have just as easily done this, and I would have made a lot of money. Instead, it wasn't ready, and it goes sideways. This is why I have a loss rate that's large and a break-even rate that's large. This is why I'm only right 1/4, sometimes even 1/5 of the time, because I don't have to be right to make money, okay? Nonetheless, let's delete this. This move still looks phenomenal, right? And I would still be more than happy to watch this for a long, right? Because we're still at the averages, we're still building a beautiful sell into the potential buy, right? So nothing about this has shown like negativity yet, but also notice that we're no longer 72 hours later. We're almost, let me show you right now, we're already 8 days later, right? So everything we just did, 8 days later, everything we just did together in the span of what, like 20, 30 minutes in terms of this area here was 8 days of action. A lot of traders cannot understand or process this. A lot of traders think that because they've chosen an asset or because they found something or because the screener has demonstrated an asset worth trading, that it means that the setup's going to happen. This is not the case. Sometimes a weekly thing doing this could mean 4 more weeks until there's a good setup or even 6 more weeks. So it's very important to gauge yourself through the EVC and wait for the cycle rather than just assuming that because it showed up or making a good move that it's going to keep going. You have to wait for the move, okay? So let's keep doing that. Right now it does look really good, right? We have this kind of stage 2, this flush, is still building up this flush. So again, if we can get a really clean move up and then a sideways move, I'd be more than happy to long because I would still be expecting this move to happen for sure, right? And what we have is we have floating supply here. This is like the basic way that I teach liquidity, right? Because liquidity is not simple, all the little areas inside, we got to figure them out. Liquidity is actually the stuff you don't see. It's the stuff above the areas that, no one is looking at, because liquidity is created by people that try to create random assessments and start putting their orders above places because they really want to see price return, right? And it's also created by the people that go left and go, oh my God, their price is going to stop here and it's going to stop here. That's how liquidity is actually created, right? So remember that as we go forward. But that's why this is the floating liquidity or floating supply of this move, right? Same thing happened here, right? This becomes the floating liquidity or floating supply, and then what happens? Price actually pierces and takes it out, not randomly comes back, okay? Nonetheless, let's see if we can get another setup. So again, I'm just waiting for a move higher, a clean one that creates a setup. So right now we do have this little move higher, and this could actually be an entry right here. Let's take a look at what it's doing on a lower, because what we have right now is we have a stage 2, and this could all be a flush for this setup, or this could be the stage 2 with a flush for this setup. Looks really good. Let's look at the 2 minute. That's the E micro, just to validate and verify whether this is ready or not. So right now I probably wouldn't take anything. I'd just be waiting a little bit. Let's see if it comes up now. Yeah, it looks very ugly. It's not building anything, so there's no reason to even set up a trade, and I'm not going to take the time to set it up. You can see it's failing down, so we're going to ignore this, and we're just going to keep watching price and letting it develop, right? So it does fall down. This is a beautiful flush. There's not much to do, and it does come up now very heavily. Let's take a look at the daily to make sure we're still in a decent spot. So you can see the daily is just on the 20, or even just a little bit below, which is completely acceptable. So this is actually an area where I would be willing to trade it. So simply, when price does make this beautiful move higher and pause, I am actually more than happy to enter through this long. Let's take a look at the 2 minute now. Yeah, I mean, there's nothing wrong with this. So I'd be willing to take a buy stop here, put the stop here. Let's see if it comes a little bit higher first. Let's just wait a little bit. Okay, looks like it's coming down. That's okay. It can still easily create a setup. So what I'm looking at right now is, I'll show you guys. I'm looking at, okay, so it lost this low, so there's nothing to do. The low is lost, so this is no longer going to be a structural move, right? Because what we'd be doing is we'd be playing this structural move that it's clearly lost, so there's nothing to do there. And we go back to the hourly, we delete this because it's no longer there, and we just lost basically the 20 EMA on the daily, I'm assuming. All right, and there we go. Just like that, at this point, even though you could keep watching, I would stop and I would simply wait for reaccumulation. Right, there we go. Because remember, the weekly hasn't changed. Even though all this stuff is happening, even though price is failing and volatile and doing all this crazy shit, don't forget that the context of this market hasn't really changed. It's moved higher, and where we expected price to do this, right? Price has instead just gone sideways. There's nothing wrong with that. This is now building what we call a momentum MB on the weekly chart. And for those of you that have been through momentum MB1 on the weekly chart, and for those of you that have been through the material, you already know that a momentum MB is what? It's a start for a potential reaccumulation on the V. So as long as price basically doesn't lose like the 20 EMA here and come like below that area, this is going to be a completely viable market to watch on the daily. And simply, we don't touch it until price demonstrates that it wants to move higher. So let's wait for that. Okay, price starts to move higher. So notice there might have been a trade in here. Let me show you this, but I just skipped it, right? On the hourly, actually, looking at this, this looks like a really good trade. Just because of the way this is building its setup. So this is actually where I'd be willing to take the risk, and I'll show you why. So this is where you start to see that rules are made up of understanding and are not made up of indicators. Indicators are a helpful map and way to tell the story, but they are not a guarantee of how price needs to operate. So what I'll show you here is if we go to the daily, what we actually have is price that literally made a move, started building a momentum MB, and actually just built a longer term one that basically just lost the 20 for a second and began to make a move higher. So it still wants to aim for this, and this still looks very, very good. So this is an area I'd be willing to take on risk again, for sure, through this high if it actually gives us a setup. So if I look at the 2 minute now, yeah, this is perfect. Look at this. This is that structure I was talking about, right? This is your structural move that we want to get in on, right? This is the move I want to be a part of now. And this is a setup that I'm used to seeing on a lower time frame. This is actually perfect, right? So I want to buy stop the high. Again, that's that hourly high. Buy stop the high, throw the stop under either here or here. I think here is fine. We'll just throw it under this area. And boom, this is my buy stop. Again, I use the stop loss from this ATR down here. So very simple rules. Create order, stop order. We already have the risk set. So this order with the stop loss here should be around $10,000 loss if we take this, or -1 R, nothing more to think of. And let's see if we get tapped in. Okay, so it does tap us in. Stop loss goes right here, like I said. Beautiful. And again, if this wants to stop us out, it's good. If it wants to go, that's great. Right, so we look for our break even. So price taps us in, makes us pull back, starts to move higher and comes higher. If it pulls back a little bit here and goes up, I will move to break even. That's it. Okay. There's no reason not to move to break even. We're clearly making a move away. This is what I would call to be pure demand validation. So it shouldn't come back to price now if it's a real move. And simply, we let this thing do whatever it wants to do now. If it comes back, it comes back. If it doesn't, then we're going to be part of the structural move. So again, where's the structural move? On the E micro, here it is. We're simply watching for that, right? That's what we're playing. And then we can start watching it again in our entry time frame because that's where shit actually matters. It looks like it's about to stop us out. It's right on the line, but it's not there just yet. Let's see. And there we go. And we're stopped out. So you can see we are correct. It looks like we're going to be correct about price, but we're not able to be in it. And yet, we haven't lost any money. We've lost a little bit of money. Let me show you guys this. Is there a trading panel? Replay trading? Yeah, there you go. We've lost nothing. We've lost, we've lost what? What does it tell us the account size on this? Settings. Initial capital, 1,000,000. Yeah, 1 million. Yeah. Okay, so we're down like nothing right now. Okay? Easy. Okay. So back to work. Let's delete the setup. It's no longer important. And you can see, I'm not a genius. I simply play the parts where a move can happen, and if it doesn't happen, then I get out. I play the parts where a move can happen, and it might happen without me, and that's okay. Or it might fail and then give me a better setup later. That's all I can wait for, right? Now, I do think this is still building a generally clean setup. This is still under the supply zone, and this could actually be a nice setup too. And because this was a break even, we are still holding the overall orders that are coming in. So I would consider another entry. Yeah, as you can see, the structural level of this, or the way structurally this is all moving, is still very clean. So I still would actually consider another entry through this high here. Not at the moment though, because there's no clear area to put my stop. So I wait. I want to see this move higher. Now pause. Yeah, this is beautiful. So now I'd be more than happy to take a long here. Same thing. Stop kind of behind this area here. If it moves a little bit higher, I move the stop higher. Okay, so it just falls down. The setup is still fine though. If it wants to come up, it's good. Let's look at the hourly. Yep, so the hourly is flushing out now. We'll just get rid of this. The setup is no longer clean. It was much cleaner right here. Right, that was perfect, and then it lost itself. So there's nothing to do. Maybe what we can see is this can be a stage 2, a flush, and then another setup here. And if it does, then great. If it doesn't, then there's nothing to do. So let's see. It kind of flushes down. Beautiful. Let's see if we come up now. It does come up, and it does pause. This is an area where I would consider a long right here. So let's just look at the 2 minute. Again, if it loses this low, right here, it will no longer be important. Whoops, right here. It will no longer be important. Otherwise, this is a pretty decent trade, and we'll see if it starts coming up. So we wait. Let's just see. Okay, so there's nothing to do here. All right, so you should see now, like, this is a market I would have shown up to a few days now. Like, how many days? This would be now a market that we've been watching for over 22 days. So a month ago, we would have now seen that this is a market worth trading, and yet every trade we've taken so far has netted us an overall negative or break-even system, right? Again, remember what trading looks like. Even on stuff that is good and makes insane moves, because we know this thing makes a crazy move at some point, right? It doesn't mean you're just getting these beautiful, beautiful trades. It means that you're doing a lot of this stuff right here. A lot of this natural and needed back and forth. This is what we're going through right now. That's what we should be doing, though, as traders, right? And actually, right now, it's building another area right here to trade. Right, so this is actually your mini reaccumulation here. So this is your stage 1, and this is your sign of momentum, and this is your pause. And this is, again, the initial pause. There's not been a crazy move yet, so it's not like we should be scared to consider trades. Right now, everything about this has demonstrated very clean action. So if we can get a setup, I will take it. That's it. Okay, we get a nice move higher and a nice pause. Again, this is an area I want to be a buyer. So let's set it up. Buy stop, stop under the low. Probably like this. And there we go. I'll do it quickly. Boom. See if it holds. Okay, I'll cancel it. This is why I sometimes don't set it instantly, because I just don't know where the stop is actually going to go. Okay, so again, this is 0.35. Probably throw a stop right here. Beautiful. And we buy. Wait for an entry if we get it. Beautiful pause. We can even maybe move our stop up here. Yep, we can. So let's cancel this again and set up another stop order just like that. Still looks really good. Still looks very solid. See if we get tapped in here. Comes down, still looks okay. And beautiful, we're tapped in. Okay, so we're in another trade. And again, we have the same thing here, stop loss. Beautiful. And again, same thing happens. We simply wait for our management rules to be met. I want to see price move and start moving away from this to move to break even. Otherwise, I take my loss, right? Let's see what happens. So price comes down, starts moving away. If it pauses and moves higher, I'll move to break even. Okay, this is the pause. If we start moving higher now, I will move to break even. Pause a little bit higher now. If it moves through this high right here, I'll move to break even. As long as it doesn't come to our actual entry price. Okay, so now I'll wait a little bit. Okay, and we get an instant and easy loss. So it actually gaps against us and gives us a loss down here. Done. Easy. Delete the trade. Nothing to think about. Remember the fact that part of your system is actually accepting the fact that most trades are not going to be ones that work. And back to the drawing board. Back to asking yourself, are we in an area where trading is worth it? And if we are, can we trade it? Right? That's it. So what do we have here? Well, we had that flush. We had that setup. The setup was right here and it failed. Right? So now we just simply go back to waiting for an entry. It's actually building another entry right now. Right through this high. Flush, building up. So this right here is going to be another entry. Now again, I usually don't take more than one entry in an area. So, more than two entries in an area. So if this one right here would fail as well, I would actually walk away and wait for a new bit of action that has proven itself before trading. So I'm going to wait for this to actually give me a nice stop if it can. Let's just see. 0.3. Looks good here. It should start moving higher now. Okay, that's good. 0.25. Yep, this looks perfect. Okay, so we'll set up a buy stop again. And again, this would be the last one that I would be willing to take if it fails. If it fails, very important note, because that's just what my testing has shown. Okay, it does tap us in. And again, we go back to, we set up our stop loss for the loss. Easy. And again, we want to see pause, continuation, and move to break even. So nothing yet. Beautiful pause, beautiful continuation. If it pauses and moves higher now, I'll move to break even. So we need to, if we move through here, I'm at break even, okay? That's all. Okay, sure. I mean, this was up like 30K in one day, but you know, that doesn't mean anything for us. We simply now take this and move it to break even or just around, just like that, right at the, actually one more tick below. There we are. And again, it looks like it's about to stop us out, but that's okay. Let's see what it does, and it does. There you go. And we take another break even. Super simple, nothing special. Yes, this made a very nice move. And yes, it was up $30,000. But again, as I'll have to say, that money wasn't ours, right? We have rules and the rules need to be met for us to do something. If they're not met, we simply wait, right? And just like that, we don't get to be a part of that. And that's okay. And let me actually show you this again. Look at this. It looks very negative. Actually, wait, sorry. I know you guys don't see this. There we go. It looks very negative. Don't get me wrong. But this is a negative 1.32% P&L change at the moment. Who cares? Right? Keep trading your system. Okay, let's get back to it. So let's go to the daily. And again, we double check that we're still in that area where it's completely viable, completely fine. We just don't have a clean setup. So we have to wait. Right? There's nothing really to do. It is pausing again here, but this is now, actually this was one break even, one loss. So, but this is just unclean for me. I don't want to be buy stopping here because it's just not clear for me. So I'd wait. I'd wait for a better flush and then a pause if we can get one, because this is a very hard market to trade. And if it moves without me, that's fine. Beautiful stage 2 and flush. Let's see if we move higher here and pause. We do. This is a perfect buy stop right here as well. This is a buy stop that I would be willing to take. So let's actually just go and try to record this if we can. Actually, never mind. It does take out the low, so there's nothing to do here. Okay, I apologize. Ignore me, guys. I don't even know what I'm talking about. Okay, it took out the low, so this is not a buy stop now. Okay, so we wait. Beautiful flush. And again, we're back in that kind of area where there's nothing to do. Look at this. The daily begins to fail, and it's actually going sideways for a long time now, right? The weekly means That means the weekly is just building sideline. Oh, that's 11 week. The weekly is just building a sideline, right? It's building that sideways action where we're expecting this now to become some future move. But if it doesn't, then there's nothing to really do. So we'll keep an eye on the daily, but really at this point, we simply want to wait because the daily is in distribution or sideways action, right? So we want to see price prove that it wants to move higher. So this is where it becomes very easy to do nothing. And now, by the way, guys, we are 36 days later and we still haven't made money on a market. Oh my God. Welcome to trading. Here is why 90% of people lose, right? It's as simple as that. That could be the whole video. Hey, everything you just saw me do is exactly why 90% of people lose. Because no one can maintain and go through this without blowing up and losing their mind for whatever reason, even though that's what trading asks of you. Here's the data. The data proves that that's what trading needs of you. All right, so we wait. We'll wait for a move that wants to prove itself again. Okay, the move proves itself. And once again, what do? I set an alert. I check back the next day. The alert goes off. Perfect. We have a move that has started to accumulate on the daily. We have a move that has gone sideways on the daily. What is the expectancy? If price holds now, it should take off. Okay, back to the hourly. What do we have here? A beautiful stage 2, a beautiful flush. Price wants to reach for the floating supply above. This is the exact same stuff that you just saw, shown once again with a clean new move. Let's wait for a setup. Price moves higher and it pauses. I don't think this pause is that clean. So I'd wait a little bit here. It's hard to trade the ones that are right at the area, but it is above the floating supply, which is good. And because it's been going sideways and holding on this little average right there on that 10, the black one, this actually does look decent. So let's take a look at what it looks like here. And buy stopping this high could be perfectly viable. Let's see how price builds up here. Okay, so it just kind of comes down. Let's go back to the 60. Yep, so it just loses it. Again, an example where even if you set it, nothing happens. Price comes down. There's nothing to do. We wait. I mean, this is holding this low, which is important. This is actually still a very viable area right here to be in a potential buy stop. And now it actually is building up nicely. Let's see how it builds up before the entry, if it does. Otherwise, I wouldn't touch this. Let's see if it starts coming up. Okay, I don't like it anymore. It's going sideways for too long. We'll just keep an eye on the hourly. We'll delete that and we'll wait for a better setup. Okay, flush is down, nothing to do. Pause is there, nothing really to do. Pause is there. This is much nicer. Right, so again, all I'm doing right now is I'm waiting for longs through a high. Right, that's it. This is the double MB, or also known as the ICI. Here, I can draw it for you. There it is. This is the expectancy. This is the setup. Nothing more to it. Let's watch the 2 minute. And again, how did we find this market? Through the screener. What did the screener tell us? That it was viable. Then what did we do? We looked at the C, the V, and the E, and we qualified it. And what did we also do? We waited when things got unqualified or were not clear. And now that it's back to being potentially clear, we wait for the setup. This actually looks really good. This is what I like to see out of a market usually. So I am valid for a buy stop right now. Basically above this high. I'm just waiting for like a cleaner area to put my stop because right now this stop is way too big. So we're going to wait. I would not enter here. There would be no place to really put the stop. It'd be very hard to get the stop right. So I'd be waiting. But it could build up a sideways here. So let's just see if it does. This actually looks pretty good. This is an area where I could enter the 2 minute. Okay, so yeah, this is beautiful. So I buy stop this high now, right through here. Stop here, would that make sense? Yep. So you can see it's 0.28 and this is 0.3, that's good. So this is an area where I would actually consider a trade and be more than happy to take it. Let's see if we can get buy stopped in though. Comes down, still looks really good, and it does tap us in. Stop loss here for the negative 10K. Very nice and easy. And again, we wait for our break-even rules. That's it. So again, all I'm doing, what am I doing? I'm buy stopping through a big high with the expectancy that structurally we are gonna continue the move higher. That's it. Basic structure, no random fibs, no random zones, simply understanding how is money coming into a momentous market. Is it showing a cycle of wanting to continue, and is it special like we spoke about earlier? And because it is, at the moment, I want to trade it. So we wait for our pause and continuation higher. Beautiful down move, but now hopefully we can hold this and keep going higher. Otherwise, this looks like a very easy loss. And if it is, then it's a loss. And if it's not, then great. It looks like it holds, but it looks like it's still just going to probably take us out for a loss or not. You get your big pause, starts moving higher. If it pauses here and moves through this high right there, I'll move to break even. That's it. So we wait, and there you go. I get to move my entire trade to break even. So what would have been an easy loss is now an easy break even, and potentially even worth more money. So we play it. Looks like it's going to be a break even. And okay, maybe not. We move back to the hourly, and we simply start to manage our trade. Now, there's no telling that this is, oops, discard. Now, there's no telling that this is actually going to, see if I can drag this out. There's no telling this is actually going to hold. It doesn't matter though, right? It doesn't matter that we're up $32,000. A lot of people see that number and they start going fucking crazy, right? They both go crazy on the downside. So losing big or losing in general or even breaking even makes traders go crazy. And you know what else makes traders go crazy? The fact that they finally see profit. Profit doesn't matter if you are not making it through rules. So we ignore it because the rules for taking a partial are not met yet. So I wait. I wait for strength higher. I can't do anything right now. If it comes down, it comes down. If it doesn't, then okay, so it starts moving higher. And now we are up 150K on a trade. And there's still no rule for us to partial because we have to use lows. So what I'm going to do is I'm going to wait for a candle to give me a low, just like that. And now, because that candle low is up over 10 RR, the rule for me for being in a partial is completely met. So what I'm going to do is I'm going to create, let me show you how to do this, a sell stop order, create a sell stop for 17,500 shares. So all we're doing right now is this is half. This is half of the existing position. Sell, done. Let me get rid of this. Okay, beautiful. So now I'm just putting in, there we go. I'm just putting in the actual partial. So I'm ready to partial here. I am expecting that right now price is going to partial. If it doesn't, I'm going to go even higher, right? That's it. So we wait, okay. We move our stop behind this low now. Super simple, we made a little bit more money now. Okay, we'd wait, I'd wait here for an up candle now because it's just a down candle, so I'd wait. I'd wait. Beautiful. Stop loss behind that candle low. Nothing to do. And just like that, we've exited 50% of our position, right? We made money on what we suspected to happen, or what is natural to happen. Stage 1, stage 2, stage 1, stage 2. And if it wants to stage 1 now, and we lose our trade, it's fine. And if it wants to stage 2 and we get to meet our rules for making a big move, great. We'll be part of it. There's nothing else to do, right? And if, again, look at this. If you missed this trade, guess what you had right after? You had this trade, and you had this trade. All under the floating supply. The same setup we've spoken about multiple times now during just this video. This is how I approach the market. If you have a simple system and a simple way to go through things over and over and over again, you are always going to put yourself into a state where it becomes very easy to follow rules, okay? Now my follow-up rule for a stop loss, since this no longer has a stop on it, since we removed it? Oh no, it's at break even, right? So now my following rule is just to follow it with the 20 or a breakdown below the 10/20. So I'd move my stop probably somewhere up here, just like that, and I'd let the trade start playing out or do whatever it needs to do. If it falls off, that's unfortunate. If it goes higher, great. So hopefully here it goes higher, which it does. Now I can take my stop and move it up here. And I simply start to manage with the move. All right, if it pauses, great. If it goes, great. Holy shit. So price begins to take off in a very, very quick manner. And you can see there is no place for me to move my stop, right? Because it hasn't paused yet at the averages. So when price does this, what it just did, I simply use another 50% partial with the up candles. Here's your most recent up candle. So simply, I want to take out another partial right there. And we currently have, if you look at the number, we have 18,000 shares. So half of that is about 9,000. Done. Sell. And now we have a sell stop below here. I'm assuming it's going to hit right now. Okay, it's another up candle. Again, these are just my simple rules for managing into big winners. Oh, another up candle. Done. What else is there to do? And now we have our stop loss here. We can move it with the 20, just a little bit below the 20. We're just letting price kind of go. If it wants to keep going, great. If it doesn't, then great. Right, it pauses again right at the 10. I'll move my stop up here now. Again, all I'm doing now is I'm using the potential weakness that could come in to manage the trade. Price pauses again, move it up here. It pauses again right here. If it moves higher, I will move it to this low. If it comes down, then I'll wait and then I'll move it. That's it. Okay, perfectly easy. Move it to this low. Okay, beautiful pause. Moves higher. Now we move it to this low. And I mean, this is the easy part, right? This is where every single day that you now show up, you do the easiest thing. And you can see at full, the trade is up 66 RR. Now, I did not make 66 RR from this in any capacity, right? Of course not, because I have rules for management. And my rules for management are important to me because on times that I'm not right about a move that's crazy, well, I can still make money on this move here before it fails down, because prices don't have to make insane moves. Prices can fail, and they will fail. But at this point, everything is beautiful, right? We're building another potential flush here. I mean, it looks like it's about to stop us out, and there we go. Okay, very easy. We delete the trade. Nothing more. The trade's done. And again, what did we do? We call it one part of a move. Now again, we can open up our thing. I'll move it over a little bit. And again, now looking at this, similarly to what you'll see in my own data collection, what looks before as an area to be fearful of, here we go. What looks before as an area to be fearful of, or fearful of, or fearful of, becomes a joke up here. What looked before to be an area to be fearful of looks like a stupid joke now, right? A stupid joke. And again, I know that we're doing this from the example of a higher account, but again, as a trader, what are you trying to do? You're getting to a point where you're going to be trading a higher account, right? You're going to do that. You're going to build your capital. If you want to be a trader in the long run, you should know that you're going to get to $100,000, $300,000, $500,000. It's a guarantee. It's not like a question, right? It's not like, well, I'm going to be a trader, but I'm going to stick to my 1K. It's like, it doesn't work that way. You know what is required of you as a trader. So if you're doing the thing, then you're going to scale your account. And again, from this perspective of that account, with only 42% of our trades being profitable so far. And this is wrong because, again, it's counting our trades using the partials as well. So only one trade has been profitable so far, by the way, guys. One trade out of 1, 2, 3, 4. Out of 5 trades, one trade was profitable. That's a 20% win rate. We are up, 25% with what was that, $250,000. One trade in a year, right? One trade in a year that can do something like this, and you've made your entire year. Okay, let's get back to it. Let's full screen this and get back to it. Let's go back to the daily. So again, the question simply becomes, where are we in the move, and is it worth still trading it? Well, we made the MMB1. That's where we traded. That's where we just made our money. We made this MMB2, and now we're building an MMB3. Now in this case, we usually trade up to MMB4, but we don't really trade the MMB4, MMB2. This is now MMB3. So we are still in a very bullish market. One thing that disincentivizes me is the fact that we've now had a very big push. But if you've done the testing and studying, which I have, oftentimes, even after one push and then a pause, that first pause after a big push can still create a nice opportunity to make money. But beyond that, if there's more pauses, I would walk away from them, very likely, because we're at momentum MB4 and we've already made a big move. So there's like two factors. One is, where are you cycle-wise? And two is, what has the move already looked like? The more a move becomes very drastic and apparent, the more people start to see it or think, oh my God, I gotta get behind this. And that's when things also tend to fail, right? Because that's how trading works. Yeah, it's just natural, right? And I'll show you an example. Like, here's a good example, right? After the crazy nice move got made and you got that sideways, you had a continuation. Then the next sideways, it did have a little bit of a continuation, but then it failed, right? Maybe there's more examples in the past, right? So after enough of a nice move was made, you had a pause, and that pause did lead to a nice move. But beyond that, if you then said, I got to trade here, okay, it actually worked for a little bit more than it failed. So again, you can kind of field test this, and that's really it on this thing. But yeah, just something to keep in mind. So this is more than viable to trade, and you can see again, what do we have? Well, we have a market that has demonstrated insane momentum. The screener will have picked this up. What is the weekly doing? Well, the weekly is in pure fucking delivery. From the initial accumulation MB and the sign of true momentum that we drew, price has done nothing but deliver. This is the MMB1. So right now, all we can expect is either price keeps going, right? Or price pauses and then keeps going. Done. We've done our work. It might sound crazy for a lot of you watching this that this is what working as a trader looks like. But this is what working as a trader looks like. And most importantly, this is now all, just so you guys know, 75 days later. There you are. And now in 75 days, so again, it took one trade on one asset over 75 days where we took 1, 2, 3, 4 trades, or 5 trades, I think. It took one trade to put us up a stupid amount. An amount that any one of us would be extremely happy. And again, join our team so you can start doing this for yourself. And I'm not guaranteeing results, of course not. But this is what happens when you have a process. That's all it takes, right? It's a process. So again, same thing goes. This is the first time we're pausing off of this kind of huge move. So I do think watching the hourly here would be completely acceptable. And again, what do we have? We have a very clear stage 2. We have a very clear flush now below the average, which is a good thing to see. That is your reaccumulation range. This is your stage 1, stage 2, stage 1, stage 2, right? Even if it does this is a huge profit. If it goes even higher, which, it doesn't have to, but if it goes even higher, we make even more money. That's if we get a setup. So now let's once again wait for a setup. We want to see demand build. Let's see it happen. Demand does build. This is demand. I think this is a little bit harder to trade because it's under the moving averages. Usually it's easier to wait for a cleaner move, right? But I have traded a lot of these, so this is not terrible. I actually would probably trade this. Yeah, I would trade this. And let's see if it comes up and goes a little bit more sideways. So if I buy stop this, stop over here. This is actually completely acceptable. Yeah, so this is something I would trade just because it's right at the containment line. So I actually think this is a completely acceptable trade. So I'll put it on because again I want to demonstrate to you that it's not about the indicator or the extremely specific thing, right? It's about an understanding, and the understanding is where we are, what this market is doing, how it's moving, what the screener has said, what the EVC is saying, and the fact that now we want to be a participant. Let's see if we can get tapped in. It pauses. Does it come up though? I would cancel this trade now for sure and wait for a cleaner area to put my stop if it does come up. So let's just see. Again, what I'm watching right now is this move right here. Again, I want to see this hold and I want to see the start of move. That's it. All right. It's like as if I actually studied this action before. I know that it looks that way. I hope it doesn't actually tap us in, or hopefully it loses, just so I can showcase that I don't know what this market's actually going to do or how it's going to. Okay, I'm glad it came down. But it didn't take out the low, so this could actually still be a great setup. But I just want to do this because I'm trying to demonstrate to you that it's not that I know what markets or what this market's going to do. It's about knowing how moves operate in general, right? The same thing happens on markets over. This is phenomenal, by the way. The same thing operates and happens on markets over and over and over again, right? And we're just there to capitalize on it because we know what we're looking for. Let's see if this taps us in. Still looks really good, and we're in. Beautiful. Stop goes down here. Confirm. Hopefully we can take a loss maybe. But again, what do we want to see for our break-even rules? We want to see price move higher, maybe pause, move higher, and then we move to break-even. Let's see if we can get that. Move higher, pause, move higher. If it comes through that high, I'll move to break-even. Yep, just like that. Stop loss can go to break. Oops. Stop loss can go to break-even. Let's find where that high is. Right there. Beautiful. And let's see if it taps us out. Looks like it might. Yeah, it looks like it's going to tap us. Okay, there we go. Another break even on the board. Delete the trade. Pay no attention to it. No longer think about it because clearly that trade was not ready. And we watch the market for a continuation because right now everything is still building perfectly for what we would want to see. Okay, so we wait. Comes down very drastically, but it is a setup. This is an MB1. This is an MB2. It is holding that low, so on a lower time frame, this starts kind of coming up. That could be a trade, or if it comes up like this, it could be a trade, or even if it gaps up and does this, it could be a trade. I don't know what it could do, but we'll just watch the 2 minute. Let's just see what this does. And we have a 1.02 stop, so let's just see where that 1.02 is right now. Yeah, I would not put anything on yet. I would just wait. Oh, okay, so right now we have a gap up inside of action. So the low of that is 0. So this is actually perfect. This is another thing that I've studied and seen happen over and over again, but this is more than good for a buy stop. See if we get tapped in. If it pauses like that, I'll cancel this and I'll move my stop down here. So now we're changing up the placement a little bit because it's important to do that since, you know, I've studied a lot of these moves, and when it gaps up, I can put it here if it keeps going, but then if it pauses, then I'll put it there, which I just did. And we'll see if we can buy stop in. Okay, it instantly buy stops in. Stop loss goes right below for that 10K loss. And again, we want to see the pause, continuation. If it does that, I can move to break even. Nothing yet. Nothing. I think if it moves through this high, I'll move to break even. Yep, okay. So again, I don't know if this is going to work or if we're going to get stopped out or anything, but it's not about that, right? So you can see, like right now, a lot of people would be scared to manage their trade because they're like, well, it could come down. And it completely could. I agree. Of course it can come down. But the point is, we know what good moves should do. We know what demand validation looks like. So if this move is going to be true, what's going to happen? Same thing as we've spoken about. The structural narrative here is just simply going to take off, and this demand is going to hold, right? That's it. All right, let's just see what happens. Holy shit. Well, okay, now I can go to the hourly, and hopefully it doesn't come. And the trade is up a lot. And again, this is one of those areas, this is one of those moments where a lot of people are going to lose their minds. There's nothing for me to do here, though. I have to follow my rules. Whoops. I have to follow my rules for actually managing, right? Otherwise, I'm going to lose money in the long run. So just like we saw back here, yes, big moves will happen, but until I have my rules to manage, there should be nothing that I'm doing personally, right? Okay, so we wait. And we get a low. But what's that low at? 1 RR, okay, so, or 2 RR, so it's nothing to do, I just have to wait. If it comes down now, it is what it is, right? It can easily lose now, and that's fine. And you can see we just moved through the floating supply. This is one of those areas, by the way, hopefully the proof of this action, the proof of my concept might happen here, I don't know, because anything can happen, but a lot of people, like I say, day in, day out, draw high in, and when it comes to takes it out, they're like, oh, I gotta go short! Right, it's very, very dumb way to think, and people do this every day to anything, but the reality is the real liquidity here is up here. So really this move should just either go or, you know, pause and hopefully hold our stop and then take off, because all the people that sell here are going to get liquidated through that, right? That's kind of how the concept works. If it doesn't happen, then it is what it is, right? Price can easily come down as well. Don't get me wrong, this can happen, but we're not here to play the backward end of trend. We're here to play the actual trend, properly the trend. That's why we're buying into the trend, not selling against it and trying to predict areas and go, oh, guys, there's an equal low here. Oh my God, we're going to take it so we can go up. Like, this is not the game that we play, right? We simply play the game of where are buyers coming in? Let's be there with the buyers or sellers, right? If it's flipped. So again, if a market looks like this, simply you can sell into it. That's exactly what I did recently with like some of these cryptos. I'm actually selling them right now. But let's see. So it does start a little move higher. This looks actually really good, by the way. Okay, and we gap up, it looks like. Cool. What's that low at? 4.4. So I would wait for like one more up candle before I start managing. Beautiful, beautiful. So again, all I'm gonna do is I'm gonna set up a sell. Sell stop. There we go. For half of the available shares, so about 5,000, because we have you can see we have a 10,000 share position. And boom, right below the low, easy. That's it, that's 50%. And we get an up candle, so my management rules are in order. And we get a down candle, so nothing to do. And we get stopped out of 50% of our position, just like that. And then we can take our stop, and we can move it with the existing low here and the 20, because again, all we're doing is we're letting the move happen. Now, because that point right there is only 2R, I actually would leave it at break even, and I would wait for this to, because it could just as easily go stage 1, 2, 1, right, 2. So that's acceptable, and I know that moves can do that. So because it's not worth for me to make 1 RR off of this, I will leave it and let it come down if it needs to go higher. I hope it doesn't, so it doesn't look like I predicted this. Okay, beautiful. So it pauses and goes. Perfect, and now we can start moving our stop. But that was my reasoning there. And now we can start moving our stop a little bit higher. I'll probably move it up here. That's about 2 RR now, or it's 4 RR, but it's 2 because of what we're gonna make on it. Looks fine to me. See, we get a pause. Okay, see, we get a pause at that 20 now, and then a move higher now. Hopefully a move higher. Beautiful. We move our stop right up here to that low created by the 20, and no, I'd wait a little bit here, just give it a little bit of chance to go up. Give it a second, give it a second. Beautiful. That's why we waited. And you can see, even if I put it there, it wouldn't have touched us out. But the reason I'm doing that is because, you know, these are the same, so I'm giving it the chance to reaccumulate there. That's all. Strong move. And now again, if it starts taking off big time, I will do a 50% again. But right now there's nothing to do except wait. And again, we have one of these insane runners, right? Like clearly insane runners. And this is, just so you guys know, one of the reasons that I chose this market specifically is because I'm aware that it did make a big run. So what I wanted to showcase is that even before the big run in areas where you might be watching stuff, it doesn't mean you have to take losses or have to take trades. And I want to show you how you can actually manage into big runs with these big P&Ls that you will experience if you allow yourself to do the rules, right? So again, I know I kind of quote unquote picked this thing, but it came from the screener. This is something that I've seen other people trade. I haven't personally traded this thing, I don't think. So I thought I'd use it as an example to showcase exactly how you can make your rules work. And this is exactly the things that I do to actually trade markets every single week, right? As you guys all know. I would move my stop up here, by the way. There we go. Pauses, moves higher, beautiful. Just throw it below this low, and looks like it, yeah, and it taps us out. And that's it, that's the whole move. And we're out of the entire position just like that. So we delete it, and we can look at this again for you guys. You know, it's starting to look a little bit like a joke now, because it's, you know, this is what happens when you have your shit in order. The profit factor is stupid high right now. That's because we only have a few trades and we had the very big winners. So ignore this profit factor because this is unrealistic. Over more time, we will have more losses and more drawdown, which is why you'll even see right now, my profit factor at the moment is at 5, which is still very high. I still expect with more time as we go into a choppier market that I go through more drawdown. So I'm not going to even bullshit you and tell you, whoa, look how insane my profit factor is, because this is very profitable. This is an insane profit factor. I expect this to go down with some more time because this is only around 220 trades over the last year and a half, right? But I just want you to keep that in mind as you look at these values or whatever, right? And now again, if we move to the daily and we take a look at this, price is pausing again right here. But this actually moves hand in hand with what I just spoke about, which is that 2 ways to prevent your ability to enter is as we get to MMB4, that's one way, and another is that we've had a substantially large move. Now there are still times, especially depending on relativity, as a lot of you in the portal have learned, relativity where like things like this could still be acceptable to trade. So for instance, you know, at this time this actually could still be acceptable to trade. But that's completely preferential based, right? It's just important to understand that as a move becomes very, very clean, or as you get the clean move, these are likely to fail. So actually, in this case, I probably would allow at least one more attempt on this, because I think it does look really clean right now. So let's see if we do get an attempt, and we do have that stage 2, and we do have that flush. So I can maybe demonstrate this if we get a nice move. So let's just see. So flush is out. Let's see if we get a little... Oh, okay, so that's where price is live right now. So this is actually live price as it currently stands. So there's actually not much to do right now. Yeah, so there we are. This is actually live price as it stands, and we are building this MMB4, and you do have the capacity for one more move here. It can definitely happen. Don't get me wrong. Like, and again, I don't think it's going to make a 100% move, but it can definitely do something like this, and that could still be a huge, huge payoff, right? I do think this is a little bit too low. I think having it come up a little bit higher would be better. But likely, very likelihood of this move is something like this, right? Just because of where we are in the move overall. However, if any of you watching this are like, hey, this actually looks pretty good, like, you know, maybe I can trade it, you're not wrong at all, right? It's actually very doable. The only thing that I would be a little bit fearful of or keep in mind is the fact that, again, if you're at MMB4 and price has already made extremely clean moves from a prior MMB, it's less likely that this kind of MMB can hold. Nonetheless, though, it could very well work and be a phenomenal move. This is something that I might even keep an eye on for now, because this could be pretty solid right now as it stands, right? Definitely by Monday, this could actually take off. And here we are. Yeah, this is where we are right now. So again, this is an example of where, you know, when I'd see this, I'd consider it, I'd look at it, I'd do a little bit of research on it. You can see we're clearly in a good sentiment institutional. We have a phenomenal 90 candle change. We have everything is being met for a screen, and you know, it's very easy because we have it all in one spot. So again, if you want access to this exact thing right here, and this is actually relatively strong. So the strength on this thing does demonstrate that there might, it probably is worth to take another piece of risk on here. And now that's for me. I'm not telling you guys to put risk on this. I don't think you should, but it does look really, really good. And by the way, that is, let's see. That is 92 days later. So again, that's 1/3 of a year, guys. A third of a year later, let's actually open this up too. Oh, did we delete it accidentally? Oh, we're at live price now. Okay, well, nonetheless, 92 days later, and you know, it's a beautiful performance. And these are the exact same steps I take to trade the things that I do trade. Like, take a look, right? Remember these trades that we just went through, that we just did? Here's a trade that I made a lot of my money on. Look at the move itself, right? Here's my weekly. I even made a video on this recently, but look at this. You have that sign of true momentum. You have those pauses, right? So again, this week happened, and then look what happened. 1, 2, 3, 4, 5, 6 weeks happened before it started going up again, and then 7, 8, and then 9, 10 weeks later. 10 weeks later, I traded it up there, right? And then where did I trade it? Well, I traded it into what? The reaccumulation that led to beautiful momentum MBs. I missed this one. And then boom, this one. And you can see it took off, and this is one of those same examples as we just saw in RGTI, where it could be a little bit extended, but I did trade it because it was a very clean move, just like RGTI is right now, and it worked beautifully. But now I would not trade this one right here. I do think this is getting a little bit extended. Too extended for me personally. We have 1, 2, 3, 4. Yeah, it's getting extremely extended up here. So trading these is like almost a guaranteed loss, but they can work, right? Don't get me wrong. Like, taking something up here can do amazing things. I remember during an insane bull market that we had, I'll even show you guys this. I traded this. Here we go. I traded this thing right here. But what you'll notice is even up here, right? You had your move start. You had your pause, right? These were all kind of contained. Then you had this huge move away, and this was your first pause after this very big move away. So, and you can see the sideways it built here was very clean. So this is one of those examples where it could be worth taking the risk because you just take a -1 if it's bad. And if it works, you can get rewarded big time. Because again, remember, this was like a 20 RR trade for me. And again, please notice that, what market did we look at? RR? Was it RR? No, RGTI, sorry, RGTI. And please notice that, you know, the money made on these markets, they didn't have to be in like insane moves. It could simply be from there to there where your money's made, right? The money I made on this move was where? Was there to there. That's it. It wasn't from there to there or there to there, right? It was simply boom to boom. One piece of action, one move, one solid move. And you can change the complete landscape that you play in. And you know, if you even learned one thing from this video, because this is going to be the public part of it, and then we're going to cut and go and do the private part of it, right? If you even learned one thing, joining up will give you more information than this by a landslide as number one, and you can get a certificate, and you can talk with me, and you can use the tools. Oh my God, that's fucking crazy. But if you can't do any of that, or you don't want to join, or whatever it is, just leave a comment about anything that you might have learned, a like or a subscription. That would be amazing. I appreciate you guys a ton. All right, that's all for me. Thank you guys so much, and I'll see you all in the next video. I hope you learned something from this one too. On the screen here.